Good morning. It's Tuesday, August 26th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So early trading sees this slight risk-off tone here as Trump takes center stage with a dramatic standoff here with Fed Governor Lisa Cook and threatens also fresh tariffs on technology and semiconductors. So you look at the S&P 500, it did dip about 25 points when that news item was released, dipping down to about 64.30 on the S&P, trading last at 64.52, so essentially traveling back up to unchanged, but with a slightly weakish tone here in the market. The NASDAQ recapturing positive territory here right at that 23,500 mark, but also that was a market that came under some serious pressure once this news item was released. So slightly higher, back to unchanged on U.S. equities in early market trading action. Now, Lisa Cook, she's a key member of the committee and she's responsible for setting policy rates. She recently secured two mortgages simultaneously. That decision suggests that both properties are classified as her primary residence. By designating them in that matter, she benefits from lower mortgage rates here that are typically reserved for primary homes rather than those associated with secondary residences, which often comes at higher interest rates. So they're trying to get her basically on mortgage fraud. So the situation really raises questions about the implications for Fed policy going forward and the broader impact on the housing market. So you look at the CME's Fed Watch tool, the odds are increasing overnight for that September 17th meeting, about an 84.3% chance of a 25 basis point interest rate cut, 15.7% chance that it's unchanged. We want to look at the day-to-day changes on this particular number. So you look at the October meeting, now you got about a 41.5% chance of an additional interest rate cut, which would bring the interest rate down to about 3.75 to 4% here on that floating rate. Now you look at the markets at a glance, again, equities just slightly unchanged. Gold popping on that news, getting up to 34.70. So still below that critical 34.50-ish area where we would need to close above that, see a continuation the next day, and then we could start to challenge those all-time highs in 3,500. But really finding some complacency. And last night, prior to this news flow coming out, we did dip back below that 3,400 mark. So really gold, if you look at it from the longer-term standpoint, we're basically at about the halfway point between major levels of support and resistance, with just anchoring and looking for any kind of direction on the play. So the market really could go either way here, given what some of the data coming out and whether or not Trump could actually go through and get Lisa Cook here fired. So silver futures, a little bit of weakness here as well. The critical levels to watch are really that Friday high, that 39.09, and then $38 would be your first level support. Market's at about 38.41. That's on the September contract. But if you're trading September, you're going to want to roll over to December, and you really want to do so as soon as possible. Or given the recent weakness, take the September contract off and look to time the roll on perhaps a little bit of volatility that we might see here in some of the tactical ranges that we put out. So your critical level of support on that contract is going to be around 37.40. That's that level where we've seen resistance all through June. We break out to the upside, retest it in July, retest it one more time, and then we see a lift off from there. So on a closing basis, that's really your critical level support is going to be that 37.40. Now Treasury yields poking up on this here, which is really interesting, and it was one of the discussions I had last night with my partner Bill Baruch here, who is flying back out to CNBC and will be on the show here later on this week, covering some of the portfolio plays we do on the wealth management side. But if you look at longer term interest rates, they shot up on that. And why? It's because you really bring in the concerns about central bank independence, and that's what foreign governments look at when they start to buy our bonds. So you have this questioning going around: is the central bank being controlled by the president, or are they operating independently? So some foreign central banks may continue to buy gold over treasuries, which may boost that gold market on up to those all-time highs. So we saw a little bit of movement in the volatility index. Volatility index is something that I'm going to look at as a hedge coming into September, because September is typically one of your weakest months when you get into the S&P 500 and you look at it from a seasonal basis. Now remember, past performance, not indicative of future results, but I really believe that the stock market is now starting to go in this sideways chop zone here, where you could see pockets of a bit of volatility in those markets here. So we're going to want to keep to look at that. Not bearish on the stock market overall, just looking at some volatility here. So the dollar index did come off on that news about the concerns with mortgage fraud with the Fed governor here, Lisa Cook. So we saw dollar come off, we saw the euro get a small boost, and we also saw some of the other foreign currencies go up as well. Now, the crude oil market slightly lower here, down about $1, as some potential tariffs are going to come in on India and some of their, remember, India is also supplying or getting a lot of supplies from oil from Russia here. And that's one of the concerns that the administration has. So looking at implementing new tariffs on India. So you've got crude oil futures down about 1.5%. You go over to Europe and Asia, those stocks overnight, well, European stocks, they did decline about 0.7%. Now that was tied directly to French political uncertainty. So they're calling for a confidence vote over there. And then in the Asian trading, you got the MSCI dropping about 1.1%. So we got a lot of things here to watch today. We've got these key levels that we've got to watch on some of the precious metals. We're also going to have Philly Fed, the non-manufacturing activity, durable goods. We'll have Richmond Fed manufacturing as well, but it's the consumer confidence that I'm going to be watching. So they're expecting another dip here, 96.4. The previous was 97.2. So you want to see the consumer start to erode a little bit here as far as their confidence is concerned. And then tomorrow we're going to have Nvidia. Their earnings are going to come out. Remember, that holds the highest weighting of any stock across many major indices. And then traders are also going to be watching that U.S. personal consumption data due out on Friday. That figure, which excludes food and energy, is expected to accelerate at one of the fastest paces in 5 years, which could limit the Fed's ability to lower rates. So that's why Trump is looking at this as a power move, get rid of Lisa Cook, appoint someone else in there who's a dove, and then he controls basically the Federal Reserve Board here, and they can start to accelerate those interest rate cuts. You look at the ETF flows on the precious metals, where there's buys on gold, silver, and palladium, sells on platinum. So the rate of change on ETF flows year to date, gold up 11%, kind of anchored around there. We saw them add about 42,000 troy ounces of gold holdings yesterday. Gold's up about 28% year to date. It did slide just a touch yesterday, down about 0.2%. And then you look at silver, that rate of change up 12% here. They added about 227,000 troy ounces of silver to their holdings in that previous trading session. So a lot on the political stuff to watch, a lot on the tariffs, a lot on positioning ahead of some of these big events here this week, again, NVIDIA and then the PCE. So we're going to want to watch all these different things here. Otherwise, outside markets here, Bitcoin just kind of stabilizing in this 112 to 108 zone, kind of anchored around 110. If you're in the August contract, you want to roll that over to September as well. So you guys got any questions, send an email to info@bluelinefutures.com. We love to work with you over here. We love to get you out some of our research. And then finally, remember that futures and option trading does involve risk of loss. It may not be suitable to all investors. Good luck and good trading.